Hey everyone, welcome back to Corporate Decode, the place where we uncover the hidden stories in your favorite company's financial filings. Today we're diving deep into Shutterstock's 2025 annual report, and let me tell you, it is a wild ride with big merger news and some serious financial shifts. This report might just change how you see the creative content world forever. First things first, Shutterstock is in the middle of a massive proposed merger with Getty Images Holdings Incorporated. This is huge, a big deal, combining two giants in the creative content space. The report details all the conditions that need to be met for this merger to actually happen, and it looks like regulatory approvals from places like the US Department of Justice and the UK Competition and Markets Authority are still in play. If this merger doesn't go through, it could really shake things up and might cause some investor jitters. The report also highlights that whether the merger happens or not, they've already spent a lot of money on professional services and transaction fees for this deal. Now, let's talk numbers. Shutterstock's total revenue for 2025 hit $989.9 million. That is a 6% jump from 2024. This growth was pretty evenly split between their traditional content licensing business and their newer data distribution and services offerings. Content revenues grew by 4% and their data services business saw a solid 16% increase, all of this despite currency fluctuations, which can sometimes make international sales look better or worse than they really are. Looking closer at the content side, the company saw a 4% increase in revenue specifically from their core content offerings, reaching $786.7 million. This growth was helped along by their acquisition of Envato, about which we will talk more later. The data distribution and services segment, which includes things like metadata licenses and their Jiffy business, really shined with a 16% revenue increase, reaching $203.3 million. This shows that Shutterstock is expanding beyond just selling images and videos. When it comes to spending, the company actually managed to slightly decrease their sales and marketing expenses by 1% down to $221 million. This is a good sign, as it means they are becoming more efficient and not just throwing money at marketing. A big chunk of their general and administrative expenses, though, jumped by 24% to $198 million, which the report attributes largely to costs associated with the Getty merger. This efficient spending helped boost their income from operations by 9%, reaching $75 million. However, when you look at the bottom line, net income for 2025 was $45.5 million, a substantial increase of 27% compared to 2024. This turnaround is positive, showing that despite a tough competitive landscape and the ongoing merger, they are managing their finances effectively. Looking at the financial tables for revenue, you can see the steady climb over the last few years. Content revenue has been growing, though, at a slower pace, while the data distribution and services segment has seen explosive growth, especially in 2023 and 2024. This diversification is a smart strategy to offset any slowdowns in their core content business. Now, some companies like to adjust their numbers to show a different picture. Shutterstock provides what they call adjusted EBITDA and adjusted free cash flow. Adjusted EBITDA grew to $271.8 million. This is up from $247.1 million in 2024. Adjusted free cash flow also saw a healthy increase to $149.5 million. These adjusted numbers help management and investors see the underlying operational performance by removing one-time costs or non-cash items. Let's talk about those acquisitions. In 2024, Shutterstock made two significant moves, acquiring Envato for $250.2 million and Backgrid for about $20 million. Envato is known for its creative assets and templates, especially Envato Elements, which is a popular subscription service. Backgrid strengthens their Shutterstock editorial offering by providing real-time celebrity content. These acquisitions clearly show Shutterstock's commitment to expanding its offerings and reaching new customer bases. Looking at risks, the company is heavily reliant on technology and needs to constantly innovate. They face stiff competition from traditional stock content providers like Getty Images, Adobe Stock, and FreePic, but also from emerging giants in AI-generated content like Midjourney Doll and Stable Diffusion. This is a major challenge, as AI content creation is rapidly advancing and could disrupt the traditional licensing model. Cybersecurity is also a big concern, as it is for most tech companies today. They have systems in place but acknowledge that threats are constantly evolving, with AI posing new challenges. Any breach could damage their reputation and lead to significant financial and legal consequences. Now, for my take, Shutterstock is navigating a complex and rapidly changing industry. Their revenue growth is steady, particularly in the newer data and services areas, which is a good sign of adaptation. The diversification through acquisitions like Envato and Backgrid is a smart move to broaden their customer appeal and revenue streams. Management seems focused on efficiency as seen in their sales and marketing spend control. However, the biggest story is the potential merger with Getty Images. If it goes through, it could create a dominant force in the creative content market, but regulatory hurdles and integration challenges are significant risks. The rise of AI-generated content is also a fundamental threat to Shutterstock's core business model, and they need to be very strategic in how they leverage or compete with these new technologies. They are taking steps to embrace AI, but its impact remains a key risk factor. The company is paying quarterly dividends, which shows financial stability, but the growth in general and administrative expenses due to merger costs is something to watch. Overall, Shutterstock is making smart moves to adapt and grow, but they are operating in a highly competitive and disruptive market. The Getty merger is a make or break event that could propel them forward or create new challenges. Their ability to leverage AI and protect themselves from cybersecurity threats will be crucial for future success. Alright, that is our look at Shutterstock's latest filing. What do you think about the potential Getty Images merger and the impact of AI on stock content? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more in-depth financial analysis. And hey, join our Discord community linked in the description for even more real-time insights and discussions. Thanks for watching, and we'll see you in the next video.